Hello, everyone. Happy New Year, and thank you for tuning into this Your Overseas Home webinar on mortgages in France. I'm Richard Way, a member of the Your Overseas Home content team, and I'll be hosting this session. It's great to have you with us, whether you're watching live or you're watching the recorded version, which is available through our on-demand webpage. So in this session, we'll be getting all the meaty facts, all the need to know stuff about the French mortgage market, including the current conditions, value of using an experienced mortgage broker to get your mortgage, the different types of mortgages available in France at the moment, and the deals available this year, and of course what to do next to start the mortgage application process. But of course it's not me who will be providing all that valuable information. It's today's specialist speaker, and that is Rob Govier from independent overseas mortgage broker MHI Group. Rob has lots of experience in the overseas mortgage industry. We've just been chatting, and he's telling me about one of his offices he's had since 2005. So you can work that out yourself. And he's been helping all types of foreign purchasers get the most suitable mortgage for them in France and other popular European destinations. For many years, whether they're buying a holiday home, a primary residence, or for investment. So welcome, Rob. You can hear us all right?
I can hear you clearly.
Fantastic. Just quickly, this is a 30-minute session, and it's a Q&A format. I'll start by asking Rob just to say a bit more about his experience, his background, and the company MHI Group. And then I've got questions to fire at him and hopefully cover off all the key points about applying for a French mortgage. But we also want to get you involved, anyone who's listening live. So we've got the questions tool, which you should hopefully be able to see on the dashboard in front of you. If you just type a question there, I'll pass that to Rob. The other thing, you can use that questions tool if you want to get details of how to get in touch with Rob following this. Put a request into the questions tool, and someone will respond with the details. Okay, that's enough from me. Let's get started. Rob, just tell us a bit more about MHI Group, how you help people, the history of the company, and your own experience.
Sure, happy to do that. My name is Rob Govier. I'm the Managing Director of the MHI Group. We've been trading for in excess of 20 years in the international mortgage market, predominantly in the core countries where people tend to buy investment or second homes, which tend to be France, Spain, Portugal, and Italy. We do go further afield than that, but they tend to be our core markets. From a personal perspective, I've been a mortgage advisor for in excess of 30 years. So have a wealth of experience, not just in international markets, but in the UK market as well. Our mission really at the MHI Group is very simple: to help people buy a property overseas if finance is required, clearly, and to make sure that's as smooth as possible, ensuring we get the very best possible deal which meets their circumstances. So that's really what we're here for.
Okay, got questions coming in already, so I will get to those, but let's cover off the main points to start with. So just tell us, Rob, at the moment, someone coming to the market today looking to buy in France in 2025, what are the conditions like at the moment, and historically compared to previous years? Is it a good time to get a French mortgage?
Yeah, is it a good time to get a French mortgage? Good first question, that one. Ultimately it's yes. If you want to buy a property this year, of course, and you haven't got the cash available, then of course it's going to be a good time to buy. Mortgage conditions across Europe, really, not just France, have obviously over the last couple of years or so, in terms of interest rates, etc., have certainly increased, because clearly the base rate has crept up somewhat over the last couple of years. We're starting to see that come down now, which is an encouraging sign, and we can anticipate that will continue for the foreseeable future. We don't anticipate rates going back up again. So if you ask me, yes, would have been cheaper 3 years ago to get a mortgage compared to today? Yes, it would have been. However, the market is still good. There's still some very good products available out there. There's an appetite from the French banks to lend. And as I say, in comparison to a lot of other countries where people looking to finance in, the rates tend to be very competitive. So I think it is a good time, in summary, to be looking to take out a French mortgage.
Is that the central bank rate that they're typically pegged to is the Euribor, isn't it? The central
That's
bank,
correct.
European Central
Yeah,
Bank.
they link it to, and to quantify that, is what they call the 12-month Euribor. There are quite a number of different Euribor rates, but it's the 12-month Euribor which then does link it to for mortgage purposes, and that has dropped by more than 1% in the last year or so. So we are seeing a good trend in that direction. And as I say, don't anticipate it falling sharply anymore, but we certainly anticipate it not increasing again. So that's the real positive news.
And you talked about how it compares in the rest of Europe. Certainly, but we do have clients here from America as well, where the rates are 6+ at the moment for a typical. So that, compared to that, they're not bad, are they? Because we'll get into more details about the sort of rates you can get, but we're looking at sort of 4% around that. Yeah.
Certainly rates. If you compare them directly to the USA, then yes, rates would be cheaper in France. No question of that at all.
Okay, thanks very much. And we are talking predominantly about British people and Americans and non-EU nationals, as well as anyone who's listening. So at the moment, most of your clients who are British or American, are they buying second homes, or are they buying as primary residence to relocate? And can you help both of those types of buyer as well, or is there a big difference in what you can do for those people?
In answer to the second point, first of all, we can help both. If people are looking to relocate them on a permanent basis, then yes, we can help those clients. Clearly, if they're looking to relocate them on a permanent basis, it's not as straightforward as it might have been in previous years, and we all know the reasons behind that, which we won't go on about, shall we say. But certainly, yes, if people are looking, we tend to find most people looking for a second home, holiday home. There may be a long-term view to actually retire there, perhaps, but certainly the vast majority of people that we're dealing with tend to be looking at it as a second home, holiday home, or perhaps to a smaller extent an investment where they can perhaps get some rental return on that property. So they tend to be the majority of the people we're dealing with, second home, holiday home.
And what's the if you have to sum up the approach of French lenders, because I've heard that compared to, say, in the UK, where we're quite a consumerist type people over here, where we're always looking for the next best deal. We'll take a small term, we'll change lender. Whereas in France, it's a bit more long term there, and people take out 20-year terms and they don't always change. Is that still the case? What's their sort of approach to lending there? And
the approach has been for many years. If we directly take UK market has always been about short-term products. Okay, so over the last few years, it's probably been fixed rates. They've been the most popular mortgage product in the sector, and most people have tended to opt for 2 years or 5 years. They've always been the two most popular terms that people look at, and then they look to perhaps take another deal at the end of that period, either with the current lender or a remortgage to another lender if they're more competitive. The overseas market, as for many years now, and particularly in France, has been geared towards long-term fixed rates. Now, those products predominantly don't exist in the UK, so it's not something we can compare them to. But it isn't unusual if you take a 20-year mortgage term that you'll get a 20-year fixed rate mortgage. So the idea is that you take out a mortgage with that bank, you stay with them for the life of the mortgage. Simple as that, until it's paid off. So that's the huge difference, I would suggest, between the UK and the French mortgage markets. I know in America, fixed rates long term are again quite a common theme, but certainly comparing it to the UK, that's a huge difference. People quite often, when we speak to them for the first time, we say, well, the product choices are either a variable rate mortgage or a fixed rate for the life of the mortgage. I think, really, does that exist? And it's very common in France. So that tends to be I would guess the biggest difference. You take out a mortgage with a bank, you'll stay with them probably for the life of that mortgage.
Good advice. Thank you. Worth noting for when people get to that stage. Okay, we're going to talk about deals and things current deals, but just talk us through why someone should come to you, a broker, rather than trying to go direct to a French bank, especially if they're coming from Britain or America. What are the
I
key
think there's
benefits that you offer?
I think I'll try and simplify. I mean, first of all, if you want, okay, so you come to somebody like ourselves, we can access the whole market. We can obviously shop around for the best deals. We know which banks would lend to you based on your circumstances as well. So you're not having to waste your time approaching a bank who, frankly, may not lend to non-resident buyers, for example, or may have large minimum mortgage amounts that they put in. So probably that's our major benefit, that we do all the shopping around for you. The next major benefit is, of course, that we do get exclusive products, because, of course, lenders will come to us and say, well, you can give us X millions of euros worth of business every year. Whereas obviously if a client goes directly to that bank, it's just one mortgage that they can give them. So because of that, lenders do offer us better terms. And again, most importantly, if you went direct to that lender, then you will find that the deal that you're likely to obtain will be inferior to what we can obtain. So they're the two major benefits I would suggest.
So you're based in London, you said. So you've got relationships with all the French banks, I guess, and you're in touch with them all the
Yeah,
time by
all the French banks that will lend to non-resident buyers, just to put a caveat to that, because again, not every French bank is interested in a non-EU buyer, for example. So the banks that will, and again, you might end up, if you were doing it yourself, you might contact the bank and say, sorry, we don't lend to non-resident buyers. Next one does exactly the same. So you've just wasted a lot of your time. And then when you actually go through the process, again, depending on your circumstances, there may be certain banks that, for example, don't like a client who's self-employed. They may not like you if you have more than one mortgage, if you have a property portfolio. Now, we would know that, whereas obviously an individual approaching that bank directly wouldn't necessarily know that. And as soon as they start having a conversation with the lender, they say, sorry, you don't meet our criteria. And then that's it. So, we save the clients a huge amount of time, and obviously a lot of money in the long term, because, of course, if we're able to get a preferential rate, that's going to save them potentially thousands of euros over the term of the mortgage.
Can you hear me?
Hello, are you back in the room, Richard?
I'm really sorry, my power just went down.
Easily done.
It just powered down, but it's back. So
we're back in the room. That's the main thing.
I'm back here. I'm really sorry about that. So we're talking about brokers, weren't we? And the benefit of using brokers. Yeah. So the other thing you didn't mention, of course, is that you speak fluent English as well. So there's no language barrier. Not just speaking, but looking at documents and things like that. People don't have to try and understand and work through French documents. You're doing all that for them. So
Exactly
Uh,
that. Yeah, that's a huge part because again, a lot of the French banks will be able to speak to a reasonable extent in English, but they won't necessarily fully understand it. We can obviously explain all the documentation to them, which of course saves them a lot of time and makes it easier for us to present the case in its best light.
Okay, we're getting quite a lot of questions about eligibility, but specifically to age as well.
Yes,
So
I've seen that. Yeah.
you can see that. Let's just look at the eligibility and how people, how different profiles can get approved for mortgages in France. Just tell us
Mm.
through what the strongest profiles are. Talk about age limits and the sort of things that French banks will want to know about to fall
Okay, well,
through
we'll
your
do it in
year.
reversal. There's such a question come up with a gentleman who's nearly 70 or coming up to 70. That's going to be a big no from the French banks, unfortunately. They tend to like the mortgage to be paid off by age 70. They have a minimum mortgage term typically of 5 years. So maximum age for a lot of banks will be 65. For the banks that will lend above 70, they may go to age 75. But again, that would then make the repayments quite prohibitive, generally speaking. If you come to the age of 70, trying to pay a mortgage off over 5 or 6 years is going to be not cheap, I would suggest. So going back to your question about the sort of profile, there's certain profiles that I will put to you that they are less keen on. So that would be self-employed people with a property portfolio. So perhaps people have a number of buy-to-let properties that they receive income from, particularly if they have mortgages on those. That's something which the banks, they won't necessarily not lend, but they are a lot more difficult to get approval for. If you like, what I would call the vanilla type of candidate is somebody who's employed, been employed for a long time, good salaries, guaranteed income, not reliant upon bonuses, commissions, etc. And age-wise, yeah, probably below 50 is probably their ideal candidate. So they tend to be relatively straightforward because, of course, it's guaranteed salary, good time in which to pay the mortgage over, which obviously helps with the bank's affordability criteria, which I'll come on to no doubt later on. So they tend to be the ideal candidates. As I say, don't think that you're self-employed means you can't get a mortgage. Don't think because you have a property portfolio you can't, but it will restrict your choice of lenders. And as I say, you will jump through a lot more hoops because they will ask a lot more information.
So just to recap, what sort of age is it? Does it start to get difficult then to get a mortgage generally in France as a
To
non-resident?
be honest with you, I mean, anything probably 10 years or less. So if you take anybody 60 plus, that's going to be quite difficult. It's probably a good time to actually touch on how they assess you, because basically how lenders will look at you is they work on what they call affordability. Okay, so as a very rough guide, the lenders will look at first of all, your net income. Okay, so obviously after taxes, etc. They then look at what credit commitments you have in your country. So that will be mortgages, loans, car finance, hire purchase, credit cards, etc. So they are, if you like, the credit commitments that they're factoring. They won't look at sort of utility bills or anything like that. So it's just credit commitments. What they then do is then say, okay, how much are you looking to borrow over how many years on the French mortgage? So they add the cost of that mortgage to your existing credit commitments, and those figures combined cannot exceed a certain percentage of your net income, very typically around a third of your net income. Okay, so that's a very rough guide because it does vary between lenders, but it's a rough guide as how they assess it. So clearly you can work out for yourselves if you're trying to take a mortgage out over a 10-year period. Of course, the mortgage repayments will be considerably higher than if you're taking it out over, say, a 20-year period. Therefore, the affordability becomes more difficult because, of course, your outgoings are going to be that much higher with your existing commitments being what they are, but a much higher mortgage payment in France. So that's the reason why it gets more difficult the older you get. So you could have identical profile clients who may have exactly the same net income, exactly the same expenditure, but if somebody's 60, it's going to be a lot more difficult than for them to be they will be essentially getting a smaller mortgage than somebody who say is age 45. So that's the key differential that you'll find, and that's why it's more difficult the older you get.
Just while we're talking about this, there's a question from Patricia. She's 64, and she said, "Is there an option to use an international lender rather than a French bank?" So I think by that she means.
Yeah, you'll tend to find there's hardly anybody now. The market has moved considerably. There was back in the day, in a lot of countries across Europe, you tended to find that you would have quite a number of international lenders. If I use Spain as probably the biggest example, back in the early 2000s, you actually had, just on its own, there was 13 UK lenders that would actually lend in Spain at that time. There's now none. Okay, so you'll tend to find that the vast majority of lenders that you're going to be dealing with will be a French bank. Okay, there are exceptions to that. There are obviously certain private banks that may do it, but predominantly it's going to be a French lender that you'll be dealing with.
Okay, let's talk a bit about the actual deals, current deals that you're getting for clients.
Sure.
Give us some examples of what you're securing at the moment for people.
I would say probably the most popular products that clients tending to accept tend to be fixed rates for the term of the mortgage. I think there's the security aspect that people like. Obviously, we give them the choice, and there's a fixed rate, there's a variable rate option. They will be normally the two options that lenders will offer. But by far and away, they tend to be the most popular products at this moment in time. Typically for the term of the mortgage, so normal deal would be sort of a 20-year fixed rate mortgage. People like that security. We've already seen over the last few years that interest rates can be volatile. If we go back to the 12-month Euribor, going back about a year ago, it was in excess of 4%. Okay, to put that in the context, if you go back 4 years ago, the 12-month Euribor was actually minus, okay, which people don't quite grasp, but we had minus interest rates. What people also forget is actually it had a minus rate for 6 years. So the 12-month Euribor, it was actually minus for a period of 6 years, okay. So when it really bottomed out, it was just over minus 0.5%. So you can see rates were very, very, very cheap at that time, because if you've got a mortgage linked to that, you're thinking this is good. Obviously, when economic events took a bit of a downturn, shall we say politely, that 12-month Euribor rose by over 4.5%. Okay, so it's quite a big swing. Okay, so hence why people like that security, because they're taking a big commitment normally, the second mortgage quite often if they've got a mortgage in their country of residence, and they just want to know what they're paying. So they tend to be the most popular products at this moment in time. In terms of rates, it just depends on which lender we go with. Typically, those sort of deals are around 4.5% at this moment in time. We might see those starting to move down as the Euribor has come down, but that's a typical popular product I would suggest at the moment. Not necessarily the cheapest product, but certainly one of the most popular products for those reasons.
And the rates will get presumably a bit higher for the longer terms, or do they come down a bit for shorter terms? Or
they tend not to differ too much, I'll be honest with you. They tend to be very similar. So there isn't a huge differential. So, you know, difference between a 15 or 20 or 25 years, there's hardly anything between them, to be frank with you. So rates tend to be fairly similar at this precise moment in time.
Okay. So around 4.5% is what people can expect. And loan to value is what sort of loan to value?
Yeah, again, depends on the profile of the client, depends which lender we can go to. It can be anywhere from as low as 50%, depends on the profile of the client. So that would typically be, you know, perhaps somebody who's self-employed with a buy-to-let property portfolio, i.e. the worst case scenario from a lender's perspective. Anywhere actually for a good candidate up to 85% of the purchase price. France has for many years been the most generous country out of what I call the core countries. So to put that in context, Spain is typically around 70, Italy's around 60, Portugal is normally around 70, but a couple of lenders will go up to 80%, but France is up to 85. So again, for the right profile, right candidate, they can go up to 85% of the purchase price, which is very generous.
Do they do interest only, the banks in France, or is it all?
Unlike a lot of other countries, where a lot of countries only do repayment mortgages now, they're predominantly repayment, but there are certain lenders that will do interest only. That might be limited to a certain amount of years. It may not be for the full term of the mortgage, because ultimately they want to see that there's a repayment vehicle in place, not just the sale of the property or some inheritance or some pension fund, whatever it may be. So they do ultimately like you to be on a repayment mortgage. Some lenders may offer interest only, but there may be a premium on the rate if you want to go down that road. So entirely up to you which way you go, but certainly that's in the marketplace, let's put it that way.
And the rates and the products we've been talking about, do they vary much between a second home buyer, someone who's a non-resident holiday home buyer, and someone who's living there? I mean, do you get,
to be honest with you, if it's somebody who's going to be buying there for either second home, holiday home, or ultimately is going to relocate there, at the time of application is how they assess it. So they're looking at the profile of the client. So if, for example, you've got a client who perhaps the nature of their work means that they can actually essentially work anywhere in the world, okay, so they're planning to relocate, they qualify under whatever visa that is available to them, or it may be they hold, for example, an EU passport. That's not unusual. We get a lot of Irish clients who look to buy, and of course they qualify under EU rules. But certainly at this moment in time, there isn't a differential. The purpose of the property is actually quite irrelevant. If you're going to be living there full time, if it's going to be a second home or holiday home, or if it's an investment property that you plan to let out, the rates tend to be very similar. That's very different from if we use the UK as an example, whereas rates tend to be quite different. So if you're buying a property, you're going to live in it as your main home, the rates tend to be more competitive. Whereas if you're looking at a property for investment purposes, i.e. a buy to let or a holiday let, the rates tend to be a bit more expensive. So, but the French banks tend not to offer different rates for, their main criteria is, can you afford it? Yes. Okay. We're happy to give you the money.
Okay. Thank you. There's a question here back on, it's loan to value, but is there a minimum value that banks like to lend? Do they say we're not going to lend less than 100,000 euros?
Yeah, it's gone up a lot over the last few years, to be truthful with you. So if we go back probably 5 or 6 years, it was actually 100,000 was the minimum purchase price. So it's quite low. And in those days, they would normally do around 75% of that. So minimum loan was 75,000. That's risen sharply, to be fair. For a lot of clients now, you will find a lot of the banks have a minimum of 150 for a few banks. Most of them now it's 250 upwards. So that's the minimum mortgage, just to quantify that. So if a lender, say, for example, will go up to 85%, they will put a caveat in, but there's a minimum mortgage amount in the first place of 250. So they're trying to steer away from the less expensive properties, shall we say, and focusing more on the sort of mid to top end of the market. If a client wants to buy somewhere at a lesser value, shall we say, then there may be alternative options. Quite often we see a lot of clients who perhaps want just buy a little bolt hole over there, typically sort of 150,000 euros. And there may be an option if they have enough equity in their own property to perhaps capital raise against that. That tends to be the most common way that people purchase a property at a lower value, providing, as I say, they own a property and there's sufficient equity in there. So don't think you can't buy a French property. It might just be you don't qualify for a French mortgage, but there may be alternative options available to you.
Because that's quite a big chunk of the French market, isn't it? A lot of the rural homes are in that sort of 200 to 400 euro bracket.
Yeah, it really is. Yeah, so it's become more challenging. That's over the last few years, but they're still lending. But as I say, quite a lot of the banks now have sort of geared towards the sort of medium to top end of the market.
Which is why it's so valuable to speak to someone like yourself to look at all the options that suit your situation and your budget and the value of your purchase. Okay, we're running out of time. One thing I think would be useful to do is just run through the actual stages, the process of getting a mortgage in France. So someone comes off this webinar and they contact you, haven't found a property yet, but they know what their budget is roughly, or what they're looking at, and they have a conversation with you. What happens next? What are the steps involved to getting a mortgage? I guess agreement in principle first, and then finding a property, and then obtaining that mortgage.
Yeah, you're spot on, actually. So we always say to everybody, get an agreement in principle prior to actually going out to view any properties. There's a very simple reason behind that. You need to make sure that you're obviously good for the money. So that doesn't cost anybody any money at all. It just means that we can do a full our own initial assessment. We'll then know which banks may be able to help you. We'll then go to the bank and get an agreement in principle from them. At that stage, that means that subject to you finding a suitable property, you're good for the finance, basically. The next step is obviously for you to find the property. Once you've found the property, the next step from the bank's perspective is they need to carry out a valuation on the property to make sure it's suitable security for them to lend on, and of course place a valuation on the property. That will normally be carried out by an independent valuer. Okay, once that's back, and assuming everything is satisfactory in terms of the value and the legal title, etc., of the property, the bank will then issue the formal mortgage offer. At that stage, essentially that's everything you need from the finance side, and then it's just down to the legal side to all be finalised for signing at the notaire. So, but the key step is always get the agreement in principle, particularly if it's a situation where we might look at the situation and say, look, French banks very unlikely to help you, but we may look at the client's assets and say, look, you've got a property worth X, you've got a relatively small mortgage on it. We would actually recommend in your situation, particularly for UK buyers, perhaps looking at capital raising over here. Again, we'll look at every avenue. We're regulated in obviously the UK as well, FCA regulated company that we are. So we'll just explore every avenue to make sure that, if it doesn't work in the country you're looking to purchase in, let's look at every option that's available to you.
Can you help? MHI can help with a equity release as well, and from a UK property. Is that something?
Yeah, essentially, yeah. If they want to release equity, from that, and that, as I say, at this precise moment in time, is quite common, because, as I say, we do have a lot of clients who are perhaps looking for a relatively small mortgage. The French banks, frankly, aren't interested because the amounts are too low for them to get interested in. But if there's enough equity in the property, then absolutely fine. We can certainly help. And sometimes it might be, it could be, help towards mortgage, not just the mortgage, but obviously deposit cost as well. As you know, there's a lot of costs, taxes, legal fees, notaire fees, etc., when you buy a property in France. So, you may say, okay, well, actually, we can also cover that as well. So we'll look at every avenue, basically, is where we're coming from. Okay.
And finally, during the purchase process, once someone's got their agreement in principle and they've been approved their mortgage, will you be, or your team be, helping to drive everything towards the finish line? So you'll be talking to the agent and liaising a bit like over here in other. So you'll keep.
Yeah, essentially we liaise with all parties. Essentially we liaise with all parties, make sure everything gets over the line. Obviously our main role, if you like, is of course the finance side. As it would be, if you've got a solicitor, for example, they're obviously going to be dealing predominantly with the legal side. But we'll liaise and coordinate and make sure, from the client's perspective, there's as little hassle as possible. You want to make the process as enjoyable. It's a stressful time. Buying a property, even if it's your second home, is stressful. So we're trying to take as much stress away, make it as easy as possible, and then everybody thinks, that was a nice experience. Doesn't always work out that way, but we certainly try our best. Let's put it that way.
That's what we like to hear. Thanks. Let's squeeze in two more questions because we are over time. The first one is asking, Richard's asking, will banks lend against an operation, a business that's got proven income, such as a Jeep business? So I'm guessing if someone's already moved to France and they have a business, or they're buying a business that's operating with a proven income, such as a Jeep business, will that help them with their affordability from the bank?
Tends to be something they don't look very favourably on, is the straight answer. And the major reason behind that is it's commercial finance, as far as they're concerned, because it's a business, it's not a residential purchase. So you would tend to find that will be very, very difficult to obtain finance on.
Okay, and the other question here was from Simon, and he says, can you buy a property in France with cash? So you buy it outright with cash and then remortgage it afterwards? Or do you need to take the mortgage at the point of
Again,
purchase?
unlike the UK, incredibly difficult to do.
Yeah.
The attitude from the French banks, well, you were able to buy it cash in the first place. What do you need money for? And you might, so yeah, they tend to be, the only way you'll get money out of it, if you like, is if you're going to carry out some major works and you want to carry out some major alterations, extensions, whatever it may be. But no, if you're going to pay, wanting to buy a property, get the mortgage before you purchase it. It's incredibly difficult to do it after. Again, very different from the UK, where it's very straightforward to do. But France, no, it's a lot more difficult to do that.
Okay, so takeaway from that is it's a cultural thing, almost different approach to the way people how they use their homes and the liquidity in their homes.
100%.
Okay, that really is all we've got time for. Thank you very much everyone who's tuned in for watching, whether it's live or you're watching a recorded version. Hope it's been useful. Do contact MHI Group or Your Overseas Home for further questions, or if you're ready to engage the services of Rob, hopefully. And his contact details have been on the chat, on the questions panel. Hopefully we've asked them, otherwise they can be sent to you afterwards. Thank you, Rob. Thank you very much for all the valuable information and giving up your time. One small request from us at Your Overseas Home: if you found this webinar useful, we'd really appreciate it if you left us a review on the review website Trustpilot. There you go. There's a little plug for it there. And finally, I've got to save the date for you, which is the Your Overseas Homes comprehensive virtual event on the 22nd of March this year. So we'll be doing lots of seminars, a bit like today, with covering all types of topics in to do with buying overseas or relocating, and all the different countries as well. It's free to join. It's a virtual event, so you can do it from the comfort of your own home. But there'll be people like Rob and agents and financial advisors on the platform live, answering questions and hopefully helping you. So that's a useful one for the diary. Otherwise, that's all for today. Thank you very much for tuning in. Thanks, Rob, and enjoy your day. Thank you, and bye-bye.